Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Friday everybody. I hope you have a restful weekend ahead. Let's jump into today's episode. We begin with the economy, and unfortunately it's a lot of bad news we need to cover. It has been confirmed that Country Garden, a massive housing developer which once was China's biggest by sales, has defaulted on a bond for the first time. This is a big deal. It means an acceleration of the slow-moving mess in the property sector and the bond market, and will likely rival Evergrande's collapse in significance. Chinese financial media outlet Caixin reports that the grace period was set to end on October 17th or 18th. The date passed without payment being made. As China's real estate market woes continue, the outlet writes, Country Garden's sales are under persistent pressure, making it difficult to fulfill repayment obligations. Quote, the first official default is likely to trigger a cross-default for Country Garden, one of the few private property developers that have managed to avoid bond default until now. As of the end of July, Country Garden had outstanding bonds, including asset-backed securities, totaling 104 billion yuan, $14.2 billion, with 26 billion yuan of onshore bonds and 78 billion yuan of offshore bonds. End quote. Meanwhile, despite various supportive measures, real estate outside of Tier 1 cities performed very poorly in September, traditionally a period of good sales. According to the National Bureau of Statistics official figures published yesterday, Thursday, new home prices in 70 cities declined 0.3% last month from August, when they declined 0.29%, representing the steepest month-on-month decline since October 2022. Prices slid 0.48% in the secondary market, the same as what we saw in August, which was the largest recorded since 2014. Of the 70 cities in the home price data, 54 reported declines in prices last month, up from 52 in August. In a note published yesterday, analysts with Goldman Sachs told clients, quote, the property markets in lower-tier cities still face strong headwinds from weaker growth fundamentals than top-tier cities, including net population outflows and potential oversupply problems. End quote. And speaking of weak fundamentals, at the close of trading yesterday, Thursday, China's 3 major A-share indices all hit new lows for the year, with the Shanghai Composite dipping to just above 3,000. Quote, the PRC stock markets have never been a reflection of the economy, but the current slide, in spite of recent efforts by the government to make short selling more expensive, directing Huijin to buy bank shares, and twice having some central state-owned enterprises buy their own shares, is, I think, a reflection of the general lack of confidence in the economy, and not just by foreign investors. Policymakers cannot be happy about this, so expect more efforts to pump the market back up. Individual investors have been burned so many times in the stock market over the years, though, that I am skeptical they will rush back in without much stronger signals of policy support and liquidity. End quote. Chinese financial media outlet Caixin published a piece late last night voicing domestic investor sentiment. Quote, no matter what the reasons are attributed to, the reality of losing money is happening to investors, whether they are mutual fund investors or stock investors, and the feeling is the same. Numbness from the decline, and the battle to defend the 3,000-point mark has once again begun. End quote. What is especially concerning is, as regular viewers know, all of this is despite Beijing's efforts to prop up the stock market. Indeed, in a report published earlier this week, Goldman Sachs said that the government has become more active in buying Chinese stocks since August. A sell-off by overseas investors continued for a second straight month in September. The CSI 300 index of yuan-traded stocks has dropped about 6% so far this year. Next up, US-China competition. If you're enjoying today's video, or I should say getting some value from today's episode, don't forget to hit the like button. Liking, sharing, subscribing are all big helps for the channel, and for anyone who wants to go the extra mile and help me keep the channel financially sustainable, open and free for everyone 6 days a week, Patreon and Buy Me a Coffee links are in the description below. As always, thank you so much everybody for the ongoing support. Yesterday, Thursday, the Pentagon released its so-called 2023 Military and Security Developments Involving the People's Republic of China report. It is worth us taking note of the salient points in the report, as it will have a direct impact on US policy on China, especially in defense and intelligence. The report argues that, quote, in 2022, the PRC turned to the PLA as an increasingly capable instrument of statecraft. Throughout the year, the PLA adopted more coercive actions in the Indo-Pacific region, while accelerating its development of capabilities and concepts to strengthen the PRC's ability to fight and win wars against a strong enemy, counter an intervention by a third party in a conflict along the PRC's periphery, and to project power globally. At the same time, the PRC largely denied, cancelled, and ignored recurring bilateral defense engagements, as well as Department of Defense requests for military-to-military communication at multiple levels, end quote. And it concludes that, quote, the People's Republic of China is continuing its efforts to overturn the international rules-based order and is building an increasingly effective military to further these aims, end quote. The report warns that China has seen a major expansion of nuclear weapons, now holding more than 500. The Pentagon estimates China will have approximately 1,000 warheads by 2030 and over 1,500 by 2035. According to the Stockholm International Peace Research Institute, as of January this year, Russia had 5,889 nuclear warheads. The United States had 5,244. A senior DoD official speaking to US-based Politico told the outlet that China's nuclear arsenal are, quote, on track to exceed previous projections. What they are doing now, if you compare it to what they were doing about a decade ago, it really far exceeds that in terms of scale and complexity. They're expanding and investing in their land, sea, and air-based nuclear delivery platforms, as well as the infrastructure that's required to support this quite major expansion of their nuclear forces, end quote. In a concerning and frankly quite brave statement, Tong Zhao, senior fellow at the Nuclear Policy Program at the Carnegie Endowment for International Peace in Beijing, China, in a recent Q&A hosted by US think tank CSIS, told the audience, quote, the message which I'm trying to emphasize is this. The change in the goals and the means of China's nuclear strategy is more a result of the increasingly chaotic and less organized and incoherent thinking within China, and that is a direct result of China's increasingly authoritarian system, end quote. The China Military Power Report also warned that China, quote, may be exploring development of conventionally armed intercontinental range missile systems, end quote. If a conventionally armed version of the system was to be developed and fielded, such capabilities would allow China to, quote, threaten conventional strikes against targets in the continental United States, Hawaii, and Alaska, end quote. While we're on US-China, we have a few quick updates related to the tightening of semiconductor controls introduced by the United States earlier this week. We already covered the details of the changes in Wednesday's video. On Tuesday, the Biden administration tightened export controls for advanced AI chips being sold to China. The primary target was NVIDIA's H800 and A800 chips, which were specifically designed to skirt controls put in place last year. Beijing has since responded. Unsurprisingly, a spokesperson with the Ministry of Commerce expressed, quote, the United States has been overstretching the concept of national security, abusing export control measures, and carrying out unilateral bullying, end quote, adding that China strongly deplores and firmly opposes the US move. Meanwhile, UK-based Reuters reports that Chinese chip equipment makers have been quick to grab market share as the US tightens curbs on its own companies, writing that nearly half, or 47.25% of all machinery equipment tenders by Chinese foundries from January through August 2023 were won by local manufacturers, according to an analysis of 182 tenders by Huatai Securities last month. From July through August this year, 62% were won by Chinese suppliers, compared to only 36% from March to April. In the United States itself, the debate surrounding the wisdom and policy settings of this chip ban continues. Quote, the payoff from this chip ban will not come immediately. The only way the entire idea makes sense is if Moore's law continues to exist, because that means the chips that will be available in 5 or 10 years will be much faster and cheaper than the ones that exist today, increasing the gap. There remain good arguments against the entire concept of the chip ban, including the obvious fact that China is heavily incentivized to build up replacements from scratch. Perhaps in 20 years the US will not only have lost its most potent point of leverage, but will also see its most cutting-edge companies undercut by Chinese competition. That die, though, has long since been cast. The results that matter are not a smartphone in 2023, but the capabilities of 2030 and beyond." End quote. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a wonderful Friday, have a good weekend, and I will see you all tomorrow.